Good day, everybody. I welcome you all to this special edition of our trading. Today, we're going to be talking about introduction to Forex trading. We'll be talking about what Forex is, the things that Forex entails, what you need to know to be a profitable trader, the basics, the fundamentals of Forex. I'll be putting you through all the things we need and we require to learn Forex. So here we go. This is introduction to Forex trading, and these are the little outlines we'll be talking about. First, we'll be talking what is Forex. What is Forex? Then we go, how do you trade Forex? How do we trade Forex? What are the things that are required to trade Forex? When can you trade Forex? What time of the day? What period? Is there a period to trade? Is there a time to trade? Now I'm talking about who trades Forex. Who are the people that trade Forex? Do you need any prior idea or knowledge and things to be able to trade Forex? What are the things you need to be able to trade Forex? Then lastly we talk about brokers. Who are brokers? What is the function of a broker? How can your broker affect your profitability as a trader? We'll be talking about those. So firstly, let us start. We shall be asking, what is Forex? Quite simply, it is the global market that allows one to trade two currencies against each other. If you think one currency will be stronger versus the other, you end up correct, then you can make a profit. If you ever traveled to another country, you usually had to find a currency exchange booth at the airports and then exchange the money you have in your wallet into the currency of the country you are visiting. You go up to the counter and notice a screen displaying different exchange rates for different currency. Take a tip for the word exchange rate. Now, what is exchange rate? An exchange rate is the relative price of two currencies from two different countries. An exchange rate is the relative price of two currencies from two different countries. So now we can go deep and say, what is Forex? The foreign exchange markets, which is usually known as Forex or FX, is the largest financial market in the world. So simply, what is this trying to tell us is that Forex is just a short form for foreign exchange. Foreign exchange. And the foreign exchange markets, the Forex market or the FX market, is the largest financial market in the world. The Forex market is a global, decentralized market where the world's currency change hands. Exchange rates change by the second, so the market is constantly in flux. Only a tiny percentage of currency transactions happen in the real economy involving international trade and tourism, like the airports example above. Instead, most of the currency transactions that occur in the global foreign exchange markets are bought and sold for speculative reasons. Who are speculators? Forex traders are people who are known as speculators. Currency traders are known as speculators. Say currency traders, also known as currency speculators, buy currencies hoping that they will be able to sell them at a higher price in the future. And I'll also give you another note that the Forex market is a $6.6 trillion a day market, which means in the Forex markets, over $6.6 trillion are exchanged a day. Every day in the Forex market, $6.6 trillion are made or are exchanged daily in the Forex markets. Okay, so over here is a comparison between the forex markets and all other exchanges. We have the forex markets with the New York Stock Exchange, Tokyo Stock Exchange, and the London Stock Exchange. So you can see the difference that the forex market is way bigger than all these other exchanges. In value, it is way bigger than all other exchanges. So if you must know, the forex market is open 24 hours a day, 5 days a week, only closing down during the weekend. So which means you can trade the forex markets for 24 hours a day in weekdays. During the weekdays, you trade the forex market 24 hours a day during the weekdays. Okay, so let me quickly put us through this. What is traded in forex? The simple answer is money. We trade money in the forex markets. That is what we trade in forex. We are trading the money. That is what we trade in forex. So I would also like to tell us, just because we trade money, which are currencies, we have things, we have those kind of things we trade. We have the kind of currencies which are major currencies. While there are potentially lots of currencies you can trade, as a new forex trader, you will probably start trading with the major currencies. Major currencies, these are the major currencies. That's the currencies that has the highest volumes of trade. Those are the major currencies. This is a pictorial representation of the major currencies, which are the CAD, a Canadian dollar, the Great Britain pound, which you have the Canadian dollar, Great Britain pound, European euro, Japanese yen, the New Zealand dollar, the Australian dollar, the Swiss franc, and the US dollar. These are the major currency pairs. They are the major currency pairs. You see, they are called major currencies because they are the most heavily traded currencies and represent some of the world's largest economies. So these are the major currencies you trade in forex. These are the major currencies we trade in forex, in as much as there are also numerous currencies in the world, but these are the major currencies. Okay, so below I will show you the currency codes, the countries that these currencies are from, the name of the currency, and the nickname, because each major currency have a nickname. So let me put us through this very quickly. The first, we have USD. That is the code USD. Once you trade forex, you don't have to know the currency name or the nickname of the country. You only need the code to trade in forex. But once you can get the code, you know the currency and the country that name is from. So first we have the USD. The country comes from is the United States. And we have dollar. The name is the dollar. The nickname is buck. The dollar also has different other names apart from buck. But this is the nickname we use in forex. Then we have the EUR. The country is the Eurozone. These are the European Union. The countries like Spain, France, Italy, Germany, and so on like that. The currency is euro, and the nickname is fiber. Then next we have the JPY. The country where JPY is used is Japan. That is the currency. The country is Japan, and the name is yen. The nickname is yen also. Then we have the GBP. The GBP is used in Great Britain, and the currency is pound. The nickname is cable. Then we have the CHF, which is used in Switzerland. The currency name is franc, and the nickname is Swizy. Then we have the CAD. The country is Canada. The currency name is dollar. The nickname is Loni. And then we have the AUD, AUD, AUD. The country is Australia. The name is a dollar, and the nickname is Oz, Oz. Then we have the NZD. The country is New Zealand, also known as the dollar, and the nickname is Kiwi. So just so you know, currency symbols always have three letters, where the first two letters identify the name of the country, and the third letter identify the name identifies the name of that country's currency. Usually the first letter of the currency's name. These three letters are known as ISO 4217 currency codes. By 1973, the International Organization for Standardization (ISO) established the three-letter codes for currency that we use today, which are as follows: NZD for example, which the NZ stands for the country name and the D stands for the currency name, which NZ is New Zealand and D is dollar, which means New Zealand dollar. Just as the USD, the US stands for the United States and D stands for the dollar, which means the United States dollar. So now we want to go to how do you trade Forex? How does Forex trading work? How does it work exactly? In the Forex market, you buy or sell currencies. Placing a trade in a foreign exchange market is simple. The mechanics of a trade are very similar to those found in other financial markets, like the stock markets. So if you have any experience in trading, you should be able to pick it up pretty quickly. And if you don't, you will still be able to pick it up as long as you finish the School of Pipsology or Forex course. So now we go to how to read a Forex quote. Currencies are always quoted in pairs, such as GBP USD or USD JPY. Those are pairs. You call them pairs of currencies. The reason they are quoted in pairs is that in every foreign exchange transaction, you are simultaneously buying one currency and selling another. How do you know which currency you are buying and which you are selling? That brings us to base and quote currency. Base and quote currency. Whenever you have an open position in Forex trading, you are exchanging one currency for another. Currencies are quoted in relation to other currencies. Here is an example of the foreign exchange rates for the British pound versus the US dollar. As you can see, the pictorial representation of it. The base currency is the first currency. You see, the GBP is the base currency. The USD is the quote currencies. So you should know these things as a new Forex trader. The base currency is always the first currency. Just like we say AUD card, that is AUD CAD. AUD is the base currency and CAD is the quote currency. So which is the first listed currency to the left of the slash is known as the base currency. In this example, the British pound, just here, the British pound is the base currency. The base currency is the reference element for the exchange rate of the currency pair. It always have a value of 1. The second listed currency on the right is called the counter or quote currency. In this example, the US dollar. This is the quote currency. The US dollar is the quote currency. So yeah, what we're just trying to say is the base currency represents how much of the quote currency is needed for you to get 1 unit of the base currency. Just for example now, if you buy Euro USD, this simply means that you are buying the base currency and simultaneously selling the quote currency. In simple terms, it means we are buying Euro and selling the US dollar. Simple terms. Which means you buy the pair if you believe the base currency will appreciate, gain value relative to the quote currency. which means we believe, in simple terms, what we're trying to say is taking euro and USD. If we believe that euro is going to appreciate over US dollar, then we buy euro and sell US dollar. So which means we buy euro USD, and we sell the pair if we think the base currency will depreciate, lose value relative to the good currency. Which means if we have a feeling that euro is going to depreciate or is going to lose its value compared to the US dollar, then we sell it, which means we sell euro USD. Okay, let me quickly put us through some basic things. Now, what is a bid? The bid is the price at which your broker is willing to buy base currency in exchange for the quote currency. A bid is the price at which a broker is willing to buy the base currency in exchange for the quote currency. This means the bid is the best available price at which you, the trader, can sell to the markets. A bid price is the price at which a broker is willing to buy, and that means it's the price you as a trader can sell. Now, what is ask? The ask price is the price at which a broker will sell the base currency in exchange for the quote currency. This means the ask price is the best available price at which you can buy from the markets. The asking price is the price you can buy from the markets. Now, what is a spread? The difference between the bid and ask price is known as spread. That is what we call spread in Forex. When they talk about spread, this is what it means: the difference between the bid price and the ask price. Just regarding what we said earlier, the bid and ask price, the difference between them is the spread. That is the difference. So now, talking about when can you trade Forex, it is time to learn about different Forex trading sessions. In Forex, we have different trading sessions for Forex trading. Different Forex trading sessions. The three major Forex trading sessions are the Asian session, which is known as the Tokyo or the Sydney section, and we have the European session, which is basically known as the London session, and we have the New York session. Those are basically three sessions where we trade Forex. So right here is the pictorial representation of the sessions that we trade. So firstly is the Sydney session, which Sydney opens at 7 o'clock a.m. and closes at 4 o'clock p.m. the local time of Sydney. And looking at the other times, it opens 5 o'clock p.m. to 2 o'clock a.m. This can be the Eastern time. And here is the GMT+1, which is probably the London time, or the London time actually precisely. GMT+1, beg your pardon, which is the GMT+1 that opens at 10 p.m. to 7 o'clock a.m. This is the difference between the time zones. So you check these time zones and compare it to your own time. Then you also have the Tokyo open and Tokyo close, the London open and London close, different times like that. You check them and see how they correlate with your time zone. Okay, so now our next talk is going to be on who trades Forex, who are the people, who are the participants, who are the players in the Forex markets. There are four major Forex market players, which are: number one, the super banks. Those are the major Forex market players we have, the banks. A lot of them. Examples are the Citibank, JP Morgan, UBS, the Barclays, the Deutsche Bank, Goldman Sachs, HSBC, and Bank of America. The second class of people who trade forex are large commercial companies. Large commercial companies also trade forex because they need to change currency from one currency to another so as to sell their products or sell their services to other countries for those companies who are multinational companies actually. Then the third people who trade forex are the governments and central banks. The governments and central banks are also involved in forex trading. Governments and central banks are also well involved in forex trading, which is also good. And lastly, the speculators. Those are people like us. People like us are speculators. We call them the retail traders. We have those who are under the speculators. We have those who are big players and small players, the big fish and the small fish. We have them in numerous numbers. Those are people who are parts of the system. So now our next talk is going to be why trade forex. There are many benefits and advantages of trading forex. Here are just a few reasons why so many people are choosing these markets. Firstly, no commissions. No commissions at all. No clearing fees, no exchange fees, no government fees, no brokerage fees. Most retail forex brokers are compensated for their services through something called the spread. That is what we talk about. Spread, which is like the difference between a bid price and an ask price. That is the spread. Second, no fixed lot size. In the future markets, lots of contract sizes are determined by the exchanges. For example, a standard sized contract for silver future is 5,000 ounces. In forex, you can trade smaller lot size or position size. This allows traders to open trade as small as 1,000 units. The thirdly is low transaction costs. The retail transaction cost, the bid or ask spread, is typically less than 0.1% under normal market conditions. For larger transactions, the spread could be as low as 0.07%. Of course, this depends on your leverage and how that will be explained later. And number 4, we have a 24-hour market. The forex market is a 24-hour market. There is no waiting for opening bell from Monday morning opening in Australia to Friday afternoon closing in New York. The forex market never sleeps. So the forex market is open 24 hours a day. Also, we have another advantage of why we should trade forex. The advantage is that no one can corner the market, which means in layman terms, which means no one single person has control over the market. No one single person can determine what happens in the markets. It's not possible. And we also have leverage. Leverage is also another thing. In forex trading, a small deposit can control a much larger total contract value. Leverage gives the trader the ability to make nice profits and at the same time to keep risk capital to a minimum. That is another example or another advantage of trading forex is deep liquidity. Because the forex market is so enormous, it is also extremely liquid. This is an advantage because it means that under normal market conditions, with a click of a mouse, you can instantaneously buy and sell at will. You are never stuck in a trade. You can even set your online trading platform to automatically close your position once your desired profit level has been reached. So there's another advantage. Another advantage is low barriers to entry. You think that getting started as a currency trader will cost a ton of money. The fact is, when compared to trading stocks, options, or futures, it doesn't. Online forex broker offer mini and micro trading account, some with a minimum account deposit of $50. So these are the advantages and the reasons why we should go into forex. It's interesting if we go into it. The first step in choosing a forex broker is finding out what your choices are. You don't just walk into a restaurant knowing what to order right away, do you? Not unless you are a frequent customer there, of course. More often than not, you check out their menu first to see what they have to offer. So we go. There are two main types of forex brokers. The first being a dealing desk, and the second being a no dealing desk. The dealing desk brokers are also called market makers. No dealing desk can be further subdivided into straight through processing (STP) and electronic communication network plus straight through processing. So this is a graphical or a pictorial representation of the types of broker, which we have the dealing desk, which are also known as the market maker. Then we have the no dealing desk, which stands for the straight through processing, and we also have the second, which are the electronic communication network plus the straight through processing. Now let's quickly go. What is a dealing desk broker? A dealing desk broker, a forex broker that operates through dealing desk. They make money through spread and providing liquidity to their clients, also called market makers. Dealing desk brokers literally create a market for their clients, meaning they often take the other side of a client's trade. Those are dealing desk brokers. Dealing desk brokers, which means whenever you place a buy, the dealing desk broker take another trade, which means they take a sell, trying to sell against you. So we quickly go. What is a no dealing desk broker? As the name suggests, no dealing desk. Brokers do not pass their clients' orders through a dealing desk. This means that they do not take the other side of their client's trade as they simply link two parties together. So now you know, under the no dealing desk, we talked about two types of brokers, which are the STP and the ECM plus STP. So what is an STP broker? So forex brokers that have an STP system routes the orders of their clients directly to their liquidity providers who have access to the interbank markets. The no dealing desk STP brokers usually have many liquidity providers, with each provider quoting its own bid and ask price. So now we go to the second one. What is an ECM broker? The ECM brokers, on the other hand, allow the orders of their client to interact with the orders of other participants in the ECM. Participants could be banks, retail traders, hedge funds, and even other brokers. In essence, participants trade against each other by offering their best bid and ask price. ECN also allows their clients to see the depth of markets. Depth of market displays where the buy and sell orders of other market participants are. Because of the nature ECN, it is very difficult to slap on a fixed markup. So ECN brokers usually get compensated through a small commission. Okay, so that does it for us as we end it there. And you can also subscribe to our channel to get more, as we'll be bringing out more contents. Expect more content, more useful content. This is just the basics, just putting you through a crash course of the basics. So you can also contact us or join our Telegram channel. Here's our link to our Telegram channel, Blue Pips Trading. Check us out. We also give free signals, daily signals, both on currency pairs, synthetic indices, and commodities. We give free signals, and we also give trading knowledge, insights, and things like that. Join us, subscribe to our channel, turn on the notification button, like. Thank you very much. God bless you. We appreciate you.